Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. A very good morning. I'm Hiral. We have with us Riya Singh, technical analyst, Currencies, joining in. Welcome to the show, Riya. My first question coming to you is, if you look at the dollar index, fifth consecutive session where we've seen a drop that has come in. We're almost eyeing a 26-month low of 92.52 on the dollar index as well. And there are multiple factors that could be affecting it. What's the sense that you pick up as to why are we seeing this kind of weakness, number one? And number two, what's the trajectory looking like?
Good morning, Hiran. So yes, like you have stated, dollar index has been in under quite a pressure lately. It has fell against the group of the 10 peers. This must have happened, probably with respect to the manufacturing data that was released on Monday, which pointed out that there has been some stalling into the economic recovery, even as US, stocks have approached all times high, but the economic recovery is still not very good as according to the data that has been released. Yen has again, led quite against the greenback. So yes, we are seeing some fallout into the dollar index, and if you look at the further data, the hedge funds have turned bearish on the dollar for the first time since May 2018, indication that there can be a slump into the world's reserve currency that can be prolonged. The positions overall have been held leveraged funds against eight currencies have dropped quite significantly, and this shift has taken to the other safe havens. Euro USD have been quite picking up into this sense. So I think the dollar will remain under pressure because even on the central bank front, if you see, they have pledged unlimited liquidity to support the economy. Now, whenever there is unlimited liquidity, obviously there can be a different aspect that can be taken into consideration, the inflation and such. Also, the central bank's near zero rate policy and asset purchases have also driven down the inflation, like I said. So it's unclear if any rebound in the currency would be there into the coming session, especially with the US presidential election approaching. So Fed is expected to maintain the policy rate at current levels. Uh, so I think going forward, dollar index will remain under pressure. There will be a shift into the the into to the much safer safe havens such as Euro USD, because quite low uh, uh, what do you say, the 10-year bonds have been all time low. Every the There is an unlimited supply of funding into the US economy. So the US assets have become very, not very much attractive for the international investors, with the yields at a quite a low at the time. So I think going forward, it can even test 92 into the coming sessions.
Right. So if we're looking at the dollar index testing a 92 in the coming sessions, what's this impact it could have on the Indian rupee? Because yes, we are seeing the rupee dollar pair, which is under consolidation yet again. But do you think taking this consolidation into consideration, uh, it's actually signaling a breakout soon?
Yes, see, as far as Indian rupee concerned, it is actually in a very quite interesting phase, because we are seeing quite a fall into the dollar index, and this is not the first time. If you remember, we have been discussing. the fallout in the dollar index, even into the previous leg that had happened, the quite steep fallout, but we didn't see much of it happening onto the Indian rupee. So the reason behind this could be, we are seeing quite a good inflows from the FIIs. The domestic front has been performing quite a well, but as far as the economic data go, we are seeing quite a surge into the inflation right now, which is expected to be at 7% into the coming days. And the central bank still absorbing the forex or pertaining to the dollar is not quite helping into the rupee much. So I think going forward it will remain into the consolidation phase, because though we are seeing good inflows and everything, but the central bank has been continuing to increase its forex reserve, thus creating some of the demand with respect to the dollar. So it will remain in quite a consolidation phase unless there is a major, major step that could be taken by the Fed, or there is some the on the dollar front, there is some major news with respect to the package that is still into the talks and will be, a decision will be taken into the coming 2 weeks. So unless then, I don't see much of happening into the USD INR pair.
Right. And when you're talking about the dollar rupee pair as well, clearly, if you've seen that we've failed to appreciate above that 74, 70 per dollar level in the last couple of weeks. Correct?
Correct.
And
Yeah.
with that as well, if you see the central bank's dollar buying interventions is something which is actually coming in as well. Now, you have a lot of Indian companies that have gone ahead and raised funds through overseas investors. So you are seeing a lot of, currency movement. We're seeing a lot of incoming that's happening. But do you think if we have to break that 74 mark, any triggers that we need to look out for?
Yes, see, like you have said, there has been companies who have raised, quite a significant amount into the coming, with respect to the capital raising. But those are very small blockers that are there, with respect to aid into the appreciation. And whenever these events have happened, rupee has appreciated, but only on a very shorter frame, and again it has bounced back. To look into it, whether it will breach the 74 levels. Now, the things that will be important will be the RBI playing its part. It's very important because I think if you look at the rates right now, they have already given out 115 basis points, and I don't think so it will go further much than that into the coming days, and the rates will remain unchanged for quite some time right now. The inflation, the control into the inflation is very important in order for the rupee to appreciate, which is now standing at 7%. And I think the unlimited, even our central bank is trying to aid into the liquidity in order to get the economy back onto the track. So the inflation rate, the fiscal deficit numbers will be very important right now. To look into the appreciation of the pair. So going forward, I think the economic numbers, not into the respect of the rupee, but overall even into the other currencies. Right now, the situation is that the economic recovery numbers and the falling out of the COVID-19 numbers will be very much important for any currency to get its power back. So I think in order to breach 74 levels, a significant recovery into the economic numbers is something that should be expected, or should be looked out for. So the coming days, the coming numbers will be something that I'll be looking out for as to how the central bank will take its stance, or what will be the action going forward on their part. But right now, as far as the ongoing events are related, and the way I'm seeing, I don't see much of happening into the rupee into the coming session.
Right. So, what would be the trade that you would suggest for today's session?
I think if you look on the technical part, euro and pound have been quite interesting into the into a recent sessions. So I think uh, there can be a possible buy that can happen into the euro and pound, because there has been a shift into these safe havens. So euro USD have risen again. We did see some fallout, but then it is again at 1.18 levels. So again, if there is a open on a positive term, we can definitely go for a buy into the domestic pair into the euro INR. Keep a support of 88.55, that is the intraday support. So a bounce back from there is expected. So buy around 88.55, 88.60 for the target of 88.97 into the coming session. And as far as pound goes, I think it is upholding 90 levels quite strongly. So that is the support for the intraday. You can definitely, if there is a positive, above 98.10 is a very good buy for the pound. So if there is a positive open above 98.10, you can definitely buy into the pound INR pair for the target of 98.25, 98.35 for the coming session. Obviously, there has been a lot of question with respect to the USD INR. Now, the range that it has been testing is 75.10 and 74.80 levels. So if you want to take any position, play with these levels. If there is an open down, if there is a weak open below 74.80, go for a short. Sorry, a breakdown of 74.90 can definitely give you a short of around 10 to 12 paise. There won't be a much momentum that can happen. So right now you only have to play along with these ranges. As far as USD INR go, I'm not recommending any option into this level because of the involatility that we are seeing into the pair and the strong narrow consolidation range. So taking position into the option is not much of prudent way to go on to the trade into the pair. But if this continues, you can definitely go for a shorter side on the option of a longer strike rate. For example, right now it is trading at 74.90. So taking into consideration the volatility and the narrow range, it is quite difficult that it will break out the 75.25 on the higher side or 75 on the lower side. So you can take position into those strike rates, but it is unlikely there will be a much of a premium. So take position accordingly. So this is as far as technical goes.
All right. Thanks a lot, Riya. Thank you for sharing those views as well as the strategies for today. And thank you, everyone.